What's happening, traders? Welcome back to another video. I hope you've had an amazing Easter break. I am going to give you a little catch up on GJ, as this is the only market that I am trading right now, and I'm finding it really fun actually, because I'm trading these ranges right now, which I've never really done before, which I'm finding quite predictable in a sense. But as long as I'm sticking to the rules, and yeah, it's quite exciting. It's quite fun. So yeah, let's dive in. So at the moment, I'm currently looking at this from a long term perspective. I'm looking at this. I was currently looking at this area here, this drop base, which we know the market first pulled back here, and I was thinking that I was going to maybe take a short potentially. I thought that we had lots of selling, the banks and the institutions selling up here to maybe take another push down. But as we can see, the market is in a sly uptrend. It's just gently moving to the upside, right? So, let's not even try and force it. Let's not try and, put our assumption on the market and say that this is what's happening, because then we lose focus on what is actually happening, right? So what's actually happening right now is that we're currently inside this area of daily supply. Whether it's not going to work or not, that makes no difference. But what matters is that there are range opportunities inside this, because the market is going to be in a state of flux until it breaks out of this zone, right? Unless it was just a zone that had nothing there at all, and the market could just push through it in 1 day or 2 days, and we'll be looking for the next opportunity in terms of our longer time frame perspective. But right now, I'm just looking at it from an H4 H1 perspective using 5-minute event breaks. So let me show you what has been happening today. So let's go down to the H4 chart. And as we can see, currently I've just drawn out two ranges, right? We've got our, as you can see, we've got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, okay? And we've got our H4 demand and our H4 supply up above. So then I go down to the H1 chart, and then I look inside here to look at fresh levels, okay? So number one, we know we've got a fresh level over here to the left, as we can see. If we wanted to get really technical about this, we could call this an event break area right here. We've got, that's not the main point of this right now. Let's just draw that to make that supply. So as we can see, the market drops from here nicely, and then it's come back into this zone with all white candles. Okay, you want to see that, especially if you're trading those H1 timeframes or those H4 timeframes. I usually like to see daily candles going into here, but now I'm trading these H1 charts. I like to see white candles, all white candles going into the H1 zone. Yes, we do have an engulfing structure right at the end here, but nonetheless, let's just see how this plays out. And you can see why this engulfing structure, number one, has got taken out, and why I was able to get into this trade. So if we drop down to the 5-minute chart, perfect. I had that on from earlier on. So we can see here that number one, I can't trade this area because there's no bearish engulfing structure, right? So this is the first event break, as the market just peaked above that, right? So we broke past here, then the market came into that area again, and then did not break out of this zone. But then what we do have is another area for event break over here. As you can see, the market came in, popped out, and then broke out, which gave me a perfect opportunity to then take a short right here. Let me just zoom in so you guys can see that clearer. So this is where I shorted. Now, I always tell you guys, make sure if you're in a situation where you've got the bearish or bullish engulfing structure and a wick beside it, don't just take this structure. Make sure you take the entire structure, including the wick, because the last thing you want is the market just popping above the structure and then moving to the downside and leaving you out of the trade, right? Trust me, it's fucking frustrating. So where are we going to take profit now? All right. Easiest place to take profit is if we drop to the H1 chart, we can see that where this market moved up from here, we've got our area of demand right here. Okay, so perfect. So let's take a look at that risk reward. Let's just get tool out. We can see that that is 5 pips. Recently, that was around like 6-7 pips because I had to bring that spread into play, and that's a 67 pips. So that's a 13-to-1 trade. All right, 13-to-1 trade, which was really nice. Now, I'm not looking to hold this past this area because we're currently aware that the market is moving to the upside. So the better play to maybe take some profits off and then let the market run is currently to the upside. But again, there's a twist to that, as I'll show you. So as we can see here, we've got a 13-to-1 trade to the downside, playing that H1 zone within that H4 supply zone as well, straight down to this H1 area of demand. And so I decided to then play it to the other side. All right, now this was extremely clear. This is like a dream, right? Absolute dream. We have this area over here. I mean, you couldn't ask for a better event break area. You just couldn't ask for one. Now, number one, we're not going to take this area here for an event. Whoa, what is that trickery? Okay, that was weird. That was weird. Okay, so we're not going to take this area here for an event break, guys. Why? Because there's no structure. All right. If we look down here, there is no structure to take. So that would not be effective. Now, this area wouldn't be an event break because this did not break this area here, but this area did. But then there's nothing to play at the bottom. But as we can see, you know, the market held at this area here on this 5-minute time frame. So the only logical place to take a long from at this point would be to take this structure, even though it's ugly as hell, right? Is to take this structure long. And this is where I'm just having some real fun, guys, just like playing with structure, sticking to the rules, and just allowing the market to come back to me. Okay, there's nothing forced here. There's no stress, no strain. I'm just simply waiting, just playing the event chain from fresh H1 levels, and just allowing the event chain to play out on the 5-minute time frame. All right, so currently this was a risk, I think, is around 10 pips. Oops, that's the wrong way. Risk of about 10 pips, I think. Come on. Yeah, around that. Yeah, so 9 pips, and we're currently up around 44 pips. So ideally, what I'm really looking for is to take this market to this area up here and take some profits off at the top of this H4 zone, and then let the market run to higher time frame daily supply. And I think somebody asked me a question about what do I mean when I say take off like 70% or 80% of the trade. So let's say, for instance, I've got a trade on at £5 a point. I will then take the profit off using, say, £4 a point. Okay, so whatever the profit is at £4 a point, I'll then take that off and then leave a pound running, for instance. Okay, so that's all I mean by like take off. So if that's for instance taking off 50% of the trade, I'll take off what £2.50 gives me at 80 pips. All right, and let the rest run at £2.50. All right, so that is that. So now what is happening? So we've got one trade currently that was 13-to-1, which was really nice, and now we're currently in a trade that is up 46 pips. Let's just dive into this a little bit deeper, because what I am looking at potentially is adding another position, and let me tell you how. Because if we just get rid of this stuff, All right, and we just get rid of that for now, and we just zoom out to the daily. We can see here that we have some structure. All right, we got this area now. And if we go down to the H1, we can see that we've got a really nice H1 area of demand nested within that daily zone. So we have two options. We could either, number one, trade down to this H1 daily zone, which is nested within this daily demand. And since we're in an uptrend, we know that there's slight momentum. So then we could immediately drop down to the 5-minute level and look for a 5-minute event break and then play that. Or we could forget about this completely and think that, well, we've got a really big ass wick happening right here, so the market could push lower than that potentially, and we could say let's just play an event break and not H1, all right, on a larger time frame. Okay, so there's two options for me at that point. And obviously this trade now, which is just over here, is currently at break even. Okay, so this trade now is currently at break even. So I'll be looking for potentially another trade within this area right here. Okay, so I could play. So again, two options. Number one, because this H1 zone is nested inside this because this H1 zone is nested inside a daily demand zone, I could play a 5-minute event break and see if it works. If it doesn't work and then goes deeper into the zone, then potentially I could play an H1 event break, and it could be a fakie altogether and continue and push past this area of daily demand, hopefully into this H4 supply, and then push to the upside. All right. But for now, because we're currently inside this area of daily demand and we're not getting nothing in terms of it's not telling us anything. We're just seeing a slight uptrend, just uptrending slightly. I'm just going to do that and play these ranges until it commits fully to one side, and then I can just hope that I am on the right side if it decides to actually start really moving, and then I'll be able to add positions to that as it continues. So that's currently GJ, guys.